Ever wondered why financial success has always seemed like an elusive dream to you? What's not clicking? What's going wrong? Well, welcome back to Finance Aligned, where we'll discuss these 8 money rules that are proven to predict financial success when followed religiously. Get paid for what you're worth and spend less than you earn. Knowing your worth is not just applicable in relationships. It's also key in finances. Even though it seems easy, many people find this first guideline to be difficult. Make sure you are aware of the market value of your position by asserting your abilities, output, job responsibilities, contribution to the business, and the going rate for your profession both inside and outside the organization. Even a small annual underpayment can have a substantial cumulative impact over the length of your working career. You'll never get ahead if you spend more than you make, regardless of how much or how little you're paid. Often, it's simpler to spend less money than it is to make more, so making a few small sacrifices here and there can help you save money. And it's not always necessary to make significant sacrifices. You can start by cutting costs on certain items like your favorite fast food recipe or spending less on your wants. Always remember to live below your means. Stick to a budget. The next rule is sticking to a budget. As Dave Ramsey said, a budget is telling your money where to go instead of wondering where it went. Budgeting guarantees that you don't spend more than you earn, allowing you to plan for both short and long-term needs. It's a simple, effective technique for people of various income and expense levels to keep their money in line. You just want to be able to check your revenue after deducting all expenses to avoid going into debt. Making a budget is a critical component of your overall success and security. A budget can assist you in making better educated financial decisions. The first step is to create a budget. It's critical to constantly track your revenue and expenses to ensure you're on target. If sticking to your budget proves difficult, realize that it will take time and continual modifications to reach the correct balance. Pay off credit card debt. Credit card debt is a big hindrance to improving one's financial status. It's easy to forget that we're dealing with real money when we take out those tiny pieces of plastic to pay for a transaction, big or small. Even though we resolve to pay the sum in full as soon as possible, the truth is that we typically fail to do so and end up spending more than we would have if we used cash. Here are some easy ways how you can pay your credit card debt efficiently. First, concentrate on one debt at a time. Do you have a credit card balance on more than one? If this is the case, make sure you always pay the minimum on each card. Then, pay down the complete sum on one card at a time. You can target which card in one of 2 ways. Number 1 is focusing on high-interest debt. You must examine the interest rate portion of your statements to determine which credit card has the highest interest rate and then prioritize paying off that debt. Number 2, consider using the snowball method. The snowball strategy requires you to pay off the card with the lowest balance first. You take the money you are paying for that loan and use it to help pay down the next smallest balance once you've repaid the balance in full. Contribute to a retirement plan. Retirement planning entails preparing for your future life today so that you can continue to meet all of your goals and dreams on your own. Setting your retirement goals, estimating how much money you'll need, and investing to grow your retirement savings are all a part of this process. Every retirement strategy is distinct. After all, you might have very specific plans for how you want to spend your retirement years. This is why it's critical to have a plan that is tailored to your specific requirements. A retirement plan has numerous advantages for you. Retirement plans enable you to invest now for financial security in the future. You also get significant tax breaks and other benefits as a bonus. Have a savings plan. Saving money is important because it provides you with more freedom and security in your life. You'll always have something to fall back on if you have money set aside for emergencies. Furthermore, if you have money set aside for discretionary expenses, you may be able to take risks or try new things. Not bad reasons to save money, aren't they? Saving is important for everyone, regardless of income, spending, or their stage in life. Here are some reasons why you should start saving. First, it provides peace of mind. Knowing that you have a certain amount saved up for times of need provides you with peace of mind. You can live a stress-free life knowing that you'll not have to struggle if things go unexpectedly wrong. Also, it gives you a better future. Your savings can help you achieve a variety of objectives. You can use your money to buy a house, save for retirement, or buy a car. You can secure your future, enjoy the best that life has to offer, and live a very satisfying life. Savings pay for your children's education. With significant savings, you can fuel your children's dreams and pay for the best schools and colleges around the world. Moreover, you can set short-term goals. Savings are not only for the long term. You can also benefit from short-term savings. Many people save for a few months before traveling. It provides security for your family in the event of an unfortunate event. By saving in a disciplined manner, you can ensure that your family is well provided for. In difficult times, your savings can act as a cushion for your loved ones, assisting them in overcoming financial difficulties. Invest. Saving is important, but it's only one factor to consider. Smart savers begin by putting aside enough emergency funds in a savings account or investing in a money market account. Investing in financial markets, on the other hand, offers numerous potential benefits after 3 to 6 months of easy access savings. Investing allows you to put your money to work and potentially increase your wealth. Your money may outperform inflation and grow in value if you invest wisely. Because of the power of compounding and the risk-return trade-off, investing has a higher growth potential. Maximize your employment benefits. Many professionals are unaware that their company provides much more than the occasional perk. In many cases, you may have access to a variety of voluntary benefits that can help you achieve greater financial stability from your job. However, how will you know if they exist if you don't ask about them or do your research? The first step in maximizing employee benefits is to determine which ones are available. Look for benefits that are provided by the employer and paid for by the employee. While you may not be able to use all of them, you should be able to take advantage of a few that will provide you and your family with peace of mind. When considering these benefits, keep in mind that not all of them will provide financial incentives. While having extra money is nice, you must consider the worth of various options. For example, having access to a legal team at a reduced rate can help you save a lot of money when drafting documents like your will. Given how much a lawyer can cost, it's worthwhile to use any available through your company instead. Review your insurance coverage. Most people contact their insurance brokers or underwriters when a significant event in their lives necessitates new or revised risk coverage, such as when they buy a new home or trade in their old car. However, far fewer people remember to review their insurance at regular intervals or when their coverage requirements change subtly. Regularly reviewing your insurance helps ensure that your coverage is what you expect it to be in the unfortunate event that you need to file a claim. It also assists in making informed coverage decisions and being proactive in lowering your insurance costs. Achieving financial success is not possible in just a snap. It requires diligence, discipline, and dedication to the set money rules. Thus, whenever the motivation to begin planning out your financial success framework, do not let it pass. And always remember, no matter how difficult it is at the beginning, the sunshine is just behind the cloud. So when it seems hard to stay by the rules at the start, just bear in mind that becoming financially secure is not just like winning a lottery. And that wraps up today's video on why trying to look rich is keeping you poor. For more similar videos about personal finance, simply subscribe here on our YouTube channel. And don't forget to hit the notification bell to keep yourself updated on our new content. For reliable personal finance tips, this is Finance Aligned, at your back for a secured tomorrow.